What's up, everybody? I'm Jared, the Stacking Surfer, and I've got an awesome interview for you guys today. But before we get started, go ahead and hit that subscribe, the bell icon, and also the thumbs up. That's going to help wake up the algorithm, and then we can share this video with more and more people. Also, I've got a goal of trying to grow the channel as much as we can. It can always be hard to get these channels going. So if you would do me a favor, share this video with at least one person that you think would enjoy it. But let's go ahead and get started. I'm going to bring Andy Schectman up, President, CEO, and owner of Miles Franklin. And also, Andy, I think you've got a great nickname from Jake's Custom Parts, which is the Time Traveler. And so far, everything you've been talking about continues to be moving towards, that inevitability of the dollar getting weaker, gold and silver going up. And so many of the things you've discussed and talked about, we've seen elements of it happening.
But spooky, actually, to be honest with you.
It is. It's a little spooky. I think some people expect it to happen just in an hour, but it takes time for these things to kind of unfold. But Andy, I wanted to start off just really talking about what's happened in the last 2 weeks with gold and silver. We've seen some major price action going on. Is there any reason for that, or do you think people are just starting to FOMO and buy into it? Have we seen any fundamental changes?
Well, in my viewpoint, we have. There's that 60-40 mantra, that 60% stock, 40% bond, that has been prevalent in financial advisory circles for decades now. And it's proven to be a good strategy for a long time. If you go back to 1982, when interest rates have fallen at a 45-degree angle for the better part of 40 years, anything in traditional assets, stocks and bonds and real estate would have done very well. And that's been a mantra. People would always get a 5% allocation acquiescence from their advisory. Sure, go ahead and buy 5%. And it's silly, because if you look at the last 25 years, as I've mentioned on your show before, Jared, gold has doubled the performance of the 10-year Treasury since the beginning of the century. It's beaten the S&P 500 over that time frame, even with dividends reinvested, which no one ever does. 9.9% for gold, 9.6% for the S&P. You can look at last year, where gold was up over 40%, the 10-year Treasury up 4.5%. You can look at this year at a 4.25% Treasury, even call it 5%, which it's not, called 4%, more accurate. 3/4 of the way through the year, you're at 3% return, with the dollar down 11%. You're a negative 8% return so far in Treasuries this year. Gold's up 50. So, there's all of a sudden this new mantra coming out of Wall Street. The chief investment officer of Morgan Stanley comes out and says, instead of a 60-40 portfolio, investors may want to consider a 60-20-20 portfolio. 60% stock, 20% bonds, 20% gold. And you have Michael Hartnett, the big-time advisor for Bank of America, who has a big buck letter that he puts out for the high, the institutional traders, paying big money for his analyzing of world events, not just the market. And anyways, he says now we should go 25, 25, 25, 25, which would be 25% stock, 25% bonds, 25% treasuries, which would be the short-term version of the bonds, the treasury notes, like up to 6 months or so, 25% gold. You have Chris Wood, who is the global head of equity strategy at Jefferies Bank. Jefferies is a bank that I have a lot of fondness for. Before they were, Jefferies bought Prudential Beige. Prudential Beige nominated Miles Franklin as an authorized reseller of U.S. Mint products. Prudential Beige used to be one of the 6 or 7 U.S. Mint primary distributors, and we were nominated by Prudential many, many years ago, 15, 20 years ago, to be an authorized reseller, one of only 27 in the world. Jefferies purchased Prudential Beige. Prudential sold to Jefferies. Jefferies got out of the gold market about a year after they took over. but they understand gold. They were one of the world's primary distributors for all the major mints. They're now saying 6,600 for gold. And then you have Jeffrey Gundlach, who is known as the Bond King, and Jeffrey, works for BlackRock, who manages like $11 trillion. And Jeffrey is saying that you ought to have at least 10% of your assets in gold minimum. And so you have all of the big money all of a sudden. Not only are they revising their projections, 4,000 is easy, up to 6,600. You have them really saying, look, it's this stock and bond trade that has put all of these people on the map. And now they're saying, yeah, maybe we should back off of that bond allocation and go heavier into gold. It's one thing when I tell you that the central banks are buying,
Yep.
which is, as far as I'm concerned, all you ever need to know. It's another thing when the most widely revered and successful traders on the globe, the institutional traders on Wall Street, start doing this. And then you really should stand up and take notice. So yeah, I think there has been a change in the way that Wall Street is looking at gold. And, I just think that, in fact, Jeffrey Gundlach, which blew me away, he said 25% in gold isn't excessive. That's what he said. 25% isn't excessive. And so 1/4 of your portfolio in gold isn't excessive. And this is from the guy that made his mark selling bonds. And, so I think that this is something that I've never seen in 35 years. And I think that's part of the reason you're seeing things really start to move in a different direction. The world, the big money is catching on that that gold and silver are far more integral than we've been led on to believe for all this time.
I think so too, Andy. It's interesting because I've got a friend. We go out to lunch several times a month, and his dad owns a brokerage company, and he's in the process of taking that over from his dad. And he wouldn't really listen much to my comments about gold and silver. He didn't really want to talk much about that until this year. And their biggest, I guess the company they follow the most is BlackRock. And last year, BlackRock recommended a 1% allocation. And then this year, they recommended a 2% allocation, which is still way lower than these other numbers. But I think the key here is everybody's moving that direction. All of the big recommenders, all of the big research analysts, at least that I'm following, are recommending to get into gold specifically.
I also think that this stablecoin Genius Act is going to have a lot to do with gold going higher, because you look at Tether, Jared, and Tether is the biggest stablecoin company by far, USDT, and it just came out with this new USA stablecoin, which will be backed 1-to-1 with U.S. Treasuries. And it's interesting that their CEO is a guy named Bo Hines, and Bo Hines was Trump's crypto advisor until recently, and now he's profiting from the decisions they made. The rules of the Genius Act say that every USA stablecoin, which will be issued not only by banks but insurance companies, credit card companies, instead of them wiring money, they'll just send stablecoins immediately. But so anyone who wants to use these digital dollars, in essence, are forced to lend money to the government, is what you're basically saying. But what's interesting is that Tether backs all of these stable coins with treasuries. The interest on the treasury, the short-term treasury, does not go to the owner of the stable coin. Tether keeps it. But with the profit, they're buying more treasury bills, and they're also buying gold. They have $9 billion worth of gold sitting in Swiss vaults right now. They were just at the last week at the Beaver Creek Gold Summit for all the mining companies, dealing directly with them. And so they're taking all of their profit and converting it into gold and into treasuries and maybe into Bitcoin. The idea here is that buying gold and Bitcoin, in particular gold in this case, will continue to devalue the dollar. at the same time, buying all of the treasuries will in this synthetic demand for the treasury, not only will help lower interest rates, but taking all the profit and buying more treasuries will continue to lower interest rates, and then putting more into gold and gold mining will continue to devalue the dollar by raising the price of gold. It is genius. It's diabolically genius. But, I guess when you got guys like BlackRock and Gunlock who built their reputation betting on bonds, you know, when these people are starting to bet against their own game, I think you should pay attention to it. So you have central banks hoarding it, you got Tether hoarding it, and you have everyone who knows how the game works buying it at the same time. So yeah, I think that is what is different in a big way, is that the big money is now taking notice.
So I want to ask a quick question to the audience. Put a 1 in the chat down below if you guys want stable coins. I'm curious to see what your thoughts are on that.
You don't have much of a choice though in this case.
I don't think you're going to, but I just want to know if you want them or not. But yeah, Andy, I don't know who it was from Russia, but it was someone in the Russian government that recently came out too and was trying to shed light on this concept as well. Basically kind of alluding to that the United States is going to try to offset all of its debt onto the world through stable coins.
Yeah, they are. It's exactly what I've been saying for about 6 months now. I mean, that is what they're going to do. 100%. And I saw that video, and that is what they're going to do. They're creating demand through issuance of stable coins, and they're making everyone use stable coins instead of traditional forms. I mean, I would venture to say before long, there'll be no more checks and wires. It'll just be instant transfer reminiscent to Zelle or Venmo, but using stable coins instead of dollar bills that represent dollar bills. It's a way for them to create synthetic demand. It's a form of almost of yield curve control where they're able to keep interest rates low by issuing more and more and more stable coins, which would just normally be how money is moved throughout the world. Now it's going to be moving, instead of in the form of a wire, it'll be in the form of stablecoin transfer.
Do you ever see a situation where the United States would start pushing those stable coins for more transactions than just that, say Social Security or potentially like government tax returns, things like that?
I think it will take the place of everything. And it's a CBDC in stablecoin clothing. They control the on-ramp and the off-ramp, but the reason they want to do it is you now have synthetic demand for the U.S. Treasury market where there is no more or much less organic demand. And I think that they would be silly to not want to, if they can get away with it, issue it on as broadly as they possibly can. And, they'll push it on third-party issuers. So American Express, or if you have a, when you get a refund, let's say you buy something on Amazon and you return it, you get a refund. It'll be in the form of stablecoin sent to your account. And, it'll show up in dollar bills or dollar figure on your account. But anytime you try to move it, it'll be instantly. You look at, like, for example, the mBridge platform, which is going to really cut out a lot of the SWIFT movement with the BRICS. Their technology settles in 7 seconds instead of the 3 to 5 days of wire takes. So you go into a Ford dealership in California where you live to buy a new F-150, and instead of having to leave the dealership to go get a wire sent, they're not going to take a personal check from you and let you drive off the lot.
Yeah.
It's the wire, right? So by the time that you could even walk to your car to go to the bank, you could have just transferred it to them. Bang, done, boom, out of your account in the form of stablecoin. Well, when you transfer it, a stablecoin is issued, transfers it. Well, that just gives them energy to buy more treasuries, to buy more gold, to buy more whatever they want to support the work or the agenda of the U.S. government. And it will be highly regulated so that they will be able to control the on-ramp and the off-ramp. And this technology will not only be KYC and AML compatible, know your client anti-money laundering, it'll be KYT, know your transaction. So they will be able to, in essence, see your fingerprint everywhere you go, and the technology will know where you came from, where your money came from, and what you bought or what kind of transaction you took part in. So yeah, it's coming, and I think it is a foregone conclusion with the passage of the Genius Act.
So I got a question here from the crowd that I think is appropriate here, Andy. So I'm going to throw it up here from Tony Lovers. He says, if you let Tether implode, the U.S. has no more obligation to pay back its debt, does it?
I haven't thought about that one. If you let Tether, I mean, you still do, because the debt, look, we have $200 trillion in debt, not just the 37 we're talking about, right? Medicare and Medicaid and Social Security and government and military pensions and the pensions on all the states and all this, this stuff is not, this isn't debt. Well, if we're just talking the government, forget about the states, but government and military pensions, that's not on the balance sheet. So the majority of the debt is owed to the American people. Of the 200 trillion in debt, maybe 7 or 8 trillion is owed to the rest of the world. All the people over the last several years in money markets and chasing yield, moving by short-term treasuries, well, that's all of us, right? You'd be stupid to leave your money in a bank where you're an unsecured general creditor, anything over 250,000 and getting paid poultry next to nothing, when you could buy 90-day treasuries paying 4.5%. And so all of that yield chasing, or even in the money market, which is backed by treasuries, that's all owed to the U.S. people. You have about 7-8 trillion owed to the rest of the world. But, I don't think that would work with Tether. Tether only has, I don't know, let me see. I had the numbers here somewhere. Let me see what they have. Hang on. They had right now, in terms of, they have right now, how did I put that Tether stuff? Tell you how much they have out there issued. Here it is.
So here's a clarification to the question as well.
70 billion worth of treasuries they have right now, and that's nothing.
Yeah, that's nothing. So clarification, if the debt in Tether, the debt in Tether, it bought it, goes bankrupt, and then. So I'm not exactly sure what you mean there, but, to me, Andy, it feels like one of the reasons we have, or at least what we're starting to utilize cryptocurrencies for, specifically Tether and stablecoins, because most cryptocurrencies have some kind of a form and function to them, besides the meme coins, which are just fun. It looks like we're using this as a way to prolong the dollar, to keep it alive longer, to continue to create more debt. If the U.S. wanted to default on its debt, would it go to the extent of doing all these things? It doesn't seem like it would.
Right. Well, if everyone wanted U.S. treasuries, they wouldn't have any reason to have to do that. You're talking about a way of, it's a scam. It's a scam where you're creating demand for something that has no demand. And, I don't think that the Treasury or the Federal Reserve particularly like cryptocurrencies. They're not doing, this isn't really a cryptocurrency. This is in essence a workaround to continue to push rates lower, which got us in the problem to begin with.
That's true.
It's financial repression in the respect that we have to come up with enough money to pay down the debt and continuing to pay the fiscal irresponsibility. And the world understands that. So they don't want to hold our treasuries that are being inflated. And they would only do it if rates were high enough to attract that risk and to attract that dilution in purchasing power. So instead, they create this Genius Act, diabolically genius, that every time you move a stable coin, which they will say is much more efficient and easier to use than the current antiquated bank, capabilities of moving money through the SWIFT system, that it instantly has ammunition to buy more treasuries to push rates lower and to fund the government. And so, yeah, I think that, there are other companies besides Tether. There's USDC, which is Circle. I think Goldman Sachs is behind them. There's the one that is from XRP, whoever, what's the name? Ripple Labs has
RLS,
a whole bunch
UD.
of dollar-based stable coins. They will all, but the thing is that you're going to see, I believe, that a lot of companies will start issuing stable coins, like credit card companies, Visa and MasterCard. Like
I've heard possibly Amazon, possibly Facebook.
Of course. And it will be just like sending Venmo or Zelle, as far as you're concerned. Bang, it's in your account. And you won't know that it's a stable coin. It'll show up as dollars. When you move it, it will be moved as a stable coin on, the rails that allow it to do so in hyperspeed without the delay. And everyone will think, wow, that's awesome. Look how fast that transfers. But in the background, when these treasuries are bought, the companies issuing them keep the spread, keep the interest, and use that to buy more treasuries and more gold to push the price of gold up, to devalue the dollar and push rates down. And this is exactly, more or less what the Mar-a-Lago Accord wants to achieve: a lower dollar, lower rates to bring back manufacturing. Now, you tie what I said about Judy Shelton to the back end of the bond market, where it is backed in gold. Instead of paying an interest, they redeem it in gold in 20 or 30 or 50 years at zero interest. You can now bring back your manufacturing at a zero upfront borrowing cost, and at a massively devalued dollar by revaluing gold, letting the market revalue it first, and then at some point maybe revaluing it the way we saw in 33 and 72 and 73. And now you can sell your goods at a massively devalued dollar price to the rest of the world and bring all the manufacturing back at zero upfront borrowing costs, because the gold isn't due for 2 decades.
And at that point, the tariffs make sense as well.
Yes, they do once you have manufacturing to support. Right now, they're not tariffs, they're sanctions.
Yeah, exactly.
And you look at the amount of gold coming into this country, and then you realize what, Vince Lancy, smart son of a bitch, says, only 85% of the gold that's being purchased isn't even being recorded that the central banks are buying. They don't want anyone to know how much they're buying. If everyone is making a grab for it, you want to be really understated and quiet, or you end up crowding yourself out of your own trade. So I don't know. I don't think that there's any real desire for any of these countries to be forthright about how much gold is coming into their respective countries, including the United States.
So Andy, looking at that, I want to change the course just a little bit, but just to kind of end on that, my opinion, it's going to be something that slowly comes into play. It'll be for different instruments. I think eventually it may be what we end up having. Maybe the banks, maybe that's even what our deposits end up turning into, as stable coins down the road. But I see them doing it as much more of a speed thing, a thing to potentially give you more benefit, right? More value. Take your Social Security check and get better value.
That's the way they're going to sell it, for sure.
Yeah. So looking at that, Andy, I got a couple other questions in here I wanted to hit for people too. So this one is on everybody's mind. We have had I would call a short price explosion in gold and silver prices. So, it's not exactly another leg up yet. I think it still needs to get higher for it to be considered the next leg in gold, for me at least. But we have had a pretty big move, some pretty big moves every day consistently. And gold's been staying above it. Some major momentum moving us forward on prices of gold and silver. Any thoughts on anything that is in particularly driving this? I know you mentioned a few things at the beginning that are the overall trends. They continue to move the precious metals up. But do you see anything in particular there? And then I'd love to get your feedback from Miles Franklin specifically. Are you seeing more people selling? Are you see people buying? What are your thoughts there?
Well, yeah, I will tell you that our business has exploded over the last few weeks. I would honestly tell you that it's the order sizes are shockingly large. These are people who are slightly more tuned in, I think, to what the market is telling the public, and they understand that they need to reposition themselves. People that have bought for the first time or existing clients who are doubling down, but it's been extraordinarily busy, but not the way it was in Silver Squeeze in 2021 when the public was running, or in when Silicon Bank failed and we added 14,000 clients in 45 days. You look at what Michael Oliver says. He says that he expects the lid to come off on silver over the next several months into the Q1 of next year and sharply be revised upward. He thinks that the technicals of both price and momentum, he's a momentum guy, are showing you what's about to occur and is already occurring. He calls it vertically upside vertically, verticality. He calls it, anyways. I think, and a repricing of silver's reality. He says. He's talking. He shows a log scale chart of 1979 and 1980 and 2010 and 11, and he says if it follows the 1979, 1980, $100 plus silver is easy. If it follows the 2010, 11, $200 is easy. And so I think that, and he says the same thing. He also said something that you talked about. I have it right here. Let me just. He says that they expect to see a corrective jolt at some point in the current upward progress, and not to be fooled by it. That pullback will be normal, but he said that the best will, if it follows the way it did before, that the best upside potential will come after that pullback. He also talks about gold in being, as he calls it, a breach of a 12-year-old gradual uptrend, a parallel channel, on momentum. He's a momentum guy, and he's not as much on technical analysis as he is on structural momentum.
Okay.
But he says that it was broken out of last month, and that he expects this month, which only has a couple days left in it, to reach all-time high closing for a month. And we've already seen the intra-month all-time high, and will we see a all-time high closing? There's a day or so left, and we might. So, you got momentum, you got central banks, you got institutional traders here in the United States. You have the only thing holding it back is that the Western public, people here in the West, they don't recognize what gold is.
Yes.
They may see it rising, but what gold is doing right now, in my mind, is not as much about gold rising. It's rising against all of the G7 countries. It's more reflective of all the G7 countries being pieces of shit printed on paper that are all collapsing. And so as these currencies collapse, the price of gold goes up. This is the whole premise of revaluing the price of gold. It's not to revalue gold to make our gold holdings worth more to back the treasury. It's to devalue the dollar, which enables us not only to pay off the debt easier, but to bring back manufacturing and sell our products to the world. This is Triffin's dilemma. Triffin's dilemma, for, again, we've talked about it. It says, and Vance wrote about this on White House letterhead. He's interviewed and said being the reserve currency isn't good for us anymore. It's a subsidy on the consumer. It's a drag on the producer. But it is that if you are the reserve currency, the world cannot get enough dollars from us alone simply through trade, that we need to provide dollars to the world. And that happens by them selling their currency to buy ours, which weakens theirs, which strengthens ours. And over time, this constant strengthening of our dollar against the world's other currencies hollows out our manufacturing because it's so much cheaper to make it over there. And you'll always have trade imbalances. And that's what Vance is saying. So everything that they're doing, including letting Stephen Mirren And remember what the analyst for Goldman Sachs said? Gold will hit 5,000 like that if the market believes the Fed has lost independence. Well, what fucking independence? Stephen Mirren is Trump's advisor. And he just kind of slides into that open, vacated spot. And he's the architect of the Mar-a-Lago Accord. I mean, the point of it is that they're transparent if you allow yourself to connect the dots. Maybe that's what I'm good at. Maybe that's why Jake calls me the time traveler. Going back to 2019, talking about BRICS and the Belt Road and the Saudis and the lack of the dollar hegemony. It was easy if you connect the dots. And reclassification of gold and the central banks buying and repatriating it and all the stupidity we saw in the previous administration, you couldn't help but see where we are going. Well, right now, they're telling you. When Trump says he who has the gold makes the rules, when Besant is a self-proclaimed gold bug who wants to preside over a new Bretton Woods, a new monetary system, who wants to remonetize the assets of the U.S. balance sheet. What assets? Largest asset is student debt, 45%. And then you got military, and then you got land. Okay, put some hotels and amusement parks on the land. Not remonetizing it, remonetizing gold. And the only reason he backed away from that statement, because he said it in February, and they said, dude, what are you doing? We need to bring more gold back. Shut up. It's not time to say that yet. And then Trump on Easter Sunday, he who has the gold makes the rules. And Judy Shelton saying we're going to peg gold to the bond market. And now the Federal Reserve writing about gold revaluation. I mean, you can't make it up. So follow the crumbs. This is all about the Mar-a-Lago Accord thesis is of a massively devalued dollar. And there is no independence at the Fed anymore, period. So $5,000 gold should be coming right around the corner. That's what Goldman Sachs says, 6,600 by Jefferies. But that's what Luke Groman says. Smart dude, maybe smarter than anyone in this industry. He says they'll let it quietly, the frog in the pot of lukewarm water, turn up the heat. They'll let the price go higher, 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 higher. And all the naysayers will say, pullback's coming, pullback's coming, pullback's coming. Bullshit, it's coming. Yeah, it may come. But what is the real price of gold? Does anybody know?
A lot higher. It's a lot higher than this.
What is price discovery? He says they'll let it rise much higher, quietly, slowly, without attracting the attention of the Western public, so that then when they do revalue it, it's from a much higher point and less ammunition needs to be spent. So I think it's going to go higher than anybody thinks, if I had to guess, but not in a straight line. There'll be some resistance, but this is the way most of the public looks at Bitcoin. For those that don't look at it from its standpoint of risk, I'm talking just price. Oh, it's too expensive. I can't buy it anymore. And that's what will happen with gold. And then, and then it will just be pegged to the back end of a system and will never come back down. That's what Jim Sinclair always said. So yeah, I think that you have to suspend your assessment of things if it's based upon the way things used to be. With the passage of the Genius Act, I would argue we've now entered a new monetary system. I think history books will come back and say this was the beginning of a new monetary system.
I think you're right, Andy, and human nature is funny with this too. I love my dad. Okay, you've got to meet him on a phone call at least.
That guy, as far as I'm concerned.
Yeah,
I love my dad just to tell everyone.
Yeah, no, he's awesome. But here's the funny thing for my dad. It's hard for him to buy when things are low. Okay. Now he understands the principle, but a lot of times he feels like, okay, he's got more time. And what ends up happening, I think, with a lot of us, and I get this a little bit too, is when momentum starts picking up and going, you get a little bit of that FOMO. You feel like I need to fear of missing out. I got to buy some right now. I got to go. And then you've got the crowd of people that say this time's different. Okay. Now, technically, I do think this time is different. This wave of gold and silver is different, and it's going to come in multiple waves. And the reason I think it's different is all the points we talk about when you come on the channel. We're talking about going from a unipolar world to I guess it's going to be a bipolar world. Probably.
Yeah, bipolar would be. Yeah.
Probably at least by maybe multiple, right? So
yes, I think it will be multiple. They will all trade their own local currencies over a bridge network like mBridge and settle imbalances in gold. And that's why China is setting up those multi-jurisdictional vaults. The next one is being built right now in Saudi Arabia.
And so for me, I have a quick story, and I want to ask you this question too here. So what I'm noticing is, like with my dad, anytime I start to see momentum going up, I know it's easier for me to recommend to him to make a move and start to move more funds out of fiat dollars and into gold and silver. The first time I tried to do it, we had silver monster boxes at $14,000. The time I was able to get him to start to do that was about $1,000 higher. And now we're looking at, $25,000 to $27,000 for at least a American Silver Eagle monster box. And we're not talking about a very long period of time, just a couple of years here, and it's jumped.
Not even.
And so
I don't even think it was more than a year and a half ago when I spoke with your dad.
I think it was less than that. Yeah, I think it was less than a year and a half. So I'm in the process of trying to convince him a little bit more. And I've got siblings I want to help that don't understand this yet. And, I want to be able to look out for them. I'm the oldest of four. And, I'll tell you about the momentum the last week and a half. That's been interesting. I've been working with one of my friends to help people that want to sell. So every once in a while, we'll come across some things. It's usually pretty low volume. So if I want to get a larger volume, I definitely reach out to you, Andy, and we do that deal. And I'll have a call out to you pretty soon to talk about a few things I'm looking at. But what I've noticed with people is, as the price starts going up, even if they lock a price in with someone locally, they don't keep it. They go, I'm going to hold on to my metals. I can't sell them anymore. I can't do it. And so I think we get that disease of recency bias, is what I'll call it. And when things are moving up, you watch, and then if you think they're going to plateau, or you hear another channel that says, "Hey, we're going to go back and test a lower amount," people get cold feet and they say, "Okay, I don't want to sell now." And when prices are going down, they hurry and freak out. They want to sell. We get a lot of whiplash. And to your point, and this kind of brings up this question here. Personally, I don't think we're going to see a repeat of 2011, because I don't think this is 2011. I think we're in a different circumstance. And as you mentioned, I do think we're going to have some plateaus. We'll have some times where we chop sideways, like we did recently with gold. We're going to have times where it jumps up. And if we don't have any pullbacks, I'll be very surprised. But I would expect we'll have some pullbacks that can be 10, 20%. But I don't think they're going to be long-lived. And just because there's a pullback, guys, on the spot price, it doesn't mean that there's going to be a pullback on premium and overall cost for the metals. So you might see those premiums kind of go bigger. So I'd love to have you address 2011, but also what happens, Andy? Let's say right now silver were to drop back down to $30 and gold were to go back down to $2,500 all of a sudden. Are you going to just, does Miles Franklin just go and sell it at those lower prices? I mean, that's an extreme. I don't see that happening, but it's a over-exaggerated example.
Well, I think the world was very different in 2011 than it is today. We weaponized the treasury market against Iran and against Russia. We invaded Iraq, I think, in 14, maybe 15. No, I take that back. We were there 22 years, so it would have been, we invaded Iraq 5 years earlier, 2005 or 6, or maybe even before 2003 or 4. But the world was very different, and not only was our indebtedness greater, or is greater now, we have crossed that road of weaponization. You see the formation of the BRICS. They're pushed to find a push back against the hegemony of the dollar, to use a common settlement system. Long before they make a common BRICS currency, they will have a common settlement system, and you can see the progress they've made. Many of the countries that are now standing for delivery were not coordinated or motivated or sophisticated enough to do this back then. They all are now. They are challenging the West through standing for delivery. They realize that the world is not about holding promises in the form of debt instruments or bonds from a broke and insolvent and tyrannical country. One who invaded Iraq looking for weapons they never found, destroyed and toppled this country, toppled the regime, destroyed the infrastructure, and we're still there 22 years later, occupying them. and no ramifications. Now, I'm not passing judgment on that war or on Russian war. As I've said on your show, it's not for us to be the judge, jury, and executioner as the world reserve currency. Putin does what he sees fit, and there are no, you're out of SWIFT. We're taking your $5 billion in treasuries. We're going to default on them and give them to the Ukraine in the form of weapons through the military-industrial complex. That nothing you can do about it. That's our prerogative as the world reserve currency. But once you do that, the whole world says, shit, they're going to do that to us too. And I don't want anything to do with that. Not to mention they're wholly irresponsible in their fiscal and monetary policy. They're broke. They're insolvent. They spend nonstop. They lie about their inflation figures. They lie about everything. They're not to be trusted. And what is the full faith and credit? What credit? We're broke. We're insolvent. What faith? And during the previous administration, I mean, God knows how much I screamed about, the absence of meritocracy in place of lifestyle. This comes from me, a guy who grew up in a home where my parents were hippies, and my house smelled like weed from the time I can remember. I mean, I grew up understanding lifestyle, right? But I worked harder than everyone in athletics and in work. I outpaced everyone in my success in these things by hard work. No one gave me anything. And open borders and lawlessness and perceptions of interference with our elections and our immigration policy and the two-tier justice system and all of this stuff. The world says they've lost their mind and their bearings. It's time to leave. And the ability for the West to hold down the paper price of metals to support the illusion of a bond market in the United States, in the UK, the European Union, to hold down silver to perpetuate the strength of military prowess in all of those countries, including the United States, to build weapons that need huge amounts of silver, and to hold down gold because of Gibson's paradox, the inverse relationships between real interest rates and gold. If you step on interest rates to create this illusion of wealth in our 401k and our home prices, because what is your house worth at 3%? What's it worth at 8, 10, 12? And same thing about the cars. What kind of car can you buy at zero interest rates for 72 or 80 months? What kind of car can you buy at 8% interest rates for 60 months? Point of it is that these low interest rates created distortions in everything. The one thing that was distorted to the downside were precious metals, not for any particular reason other than to mask what they were doing. And so when you talk about could this be a repeat of 2011? No, I don't think so. From a technical standpoint, you look at 1980 and 2011 as the two peaks of the cup. 1980 down to $4 up to 2011. Then it came down and now it's retesting. It's a double cup almost. A double cup and handle, which is the most powerful of all. It's 45 years long. That coiled power and the way that you figure out from a technical standpoint, you show that to a technical analyst and don't tell him what it is. He would say that is one hell of a technical chart. And the way you figure it is you take the top, which is 50, the bottom, which is 4, you take the difference, which is 46.
Yep.
And when it breaks through that lip again, you add it to the top. That's your next target, $96. I don't think this is 2011. I think we are at the end stages of this monetary experiment, this Keynesian Western monetary experiment. The Genius Act tells me we are now entering a new monetary system, as does the formation of the BRICS and the other 49 countries that want to join, the 11 that are already there, on top of the Shanghai Cooperation Organization and the Eurasian Economic Union and the 75% of humanity in the Belt Road that is now using this cross-border payment system, which is being integrated not only central bank to central bank, but B2B with BRICS Pay. All of it not compatible with the dollar or the SWIFT or the pound or the euro. You have 75% of the world just in the Belt Road. You add all these together, it's 90% of the world won't be using the SWIFT or the dollar, which chips away at the settlement status. And instead of taking all those reserves and buying treasuries, they'll buy gold, which chips away at the reserve status. This is the little by little by little that I talk about all the time. When is that all at once moment? Don't know. But I do believe that this is very different because these countries, and now the U.S. is very open. When the U.S. government puts silver to a strategic mineral designation, they just put a floor under the price. And so, no, I don't think this is, but I don't think it goes straight to the moon either. Stick your emotions in your back pocket and look at this pragmatically. You don't buy it to get, rich. You buy it because it's wealth. And the biggest money in the world is showing you that, and it is going to be tied to a new system. So, yeah, I think everyone is thinking that. It's because, they're like a dog that's afraid of getting hit. Every time you walk by, it goes like this, It's like you're waiting for the shoe to drop, but that's us. All us gold bugs feel that like we're that dog because that's the way it's been.
Yeah.
But that's ruled the roost. And are they beginning to lose their grip? I would argue, yes, they are. Doesn't mean that things are going to forever change in this country to third world status, but it means that the privilege we had of being respected and revered and being the world reserve currency are coming to an end. I think we're going to default softly on being the reserves currency. We don't want to anymore. We will never have manufacturing ever if we do. And with 60% of the country with no education and AI coming for a lot of jobs, you better bring back manufacturing just for national security. You can't rely on the world to make everything we need.
Yep.
And I think it's coming to an end. So, yeah, this is the mistake people will make. And to your point about your dad, if I were writing a book about why people never win at investing, the first chapter would be why people don't buy low and why people don't sell high. It's because it requires being a maverick. It requires doing what you and I are doing, standing out on a limb and saying, we look at the world differently than y'all. And most people say, well, you're out of your fucking mind. Why would you do that? I've heard that more than anybody selling gold. And isn't it funny where gold has outpaced everything? But I'm crazy.
Yeah.
The point
Literally.
of it is that whether I am or not, I get on YouTube in front of millions of people and say it. Try to be respectful about it. Say it's my belief. Do what you want. But this is the way I see the world. And I try to do my part. But the funny thing is, only very few people listen. And even those that do listen, only very few that act upon that. And that's why so few people ever get it, because there's a whole theory of investing called wave theory, Elliott wave, Kondratiev wave, human emotions drives the market more than anything is what they would say. Bob Prechter, he would say human emotions. That's what moves the markets. And that's why they say there's no bull market like a gold bull market, because the scarier it gets, the higher people it gets. People aren't scared yet. Maybe they will be. Don't know what triggers it, but maybe a banking problem, maybe a bond market problem. Who knows? A default in London, which spirals through contagion. Who knows? But the point of it is that people don't succeed in investing because they are if people worked as hard to save and invest their money as they did to make it, they'd be a lot better off. They give that to advisors who not only don't have the vested interest that you do, but they don't make any money selling gold. So they will tell you the only way to retire is to be fully stuffed like a pig with financial assets like stocks and bonds. And that worked when the United States was still revered and interest rates were falling. And now what you see in the Western countries like Canada, like in the US and London and Canada more so, where they have 7 or 8 rate cuts, and the 10 and the 30 are going to all-time highs. The market says, fuck you. I'm not taking your 10 or 30 year treasury at these paltry rates. If you want me to hold your debt of any duration, up goes the rate. And so when they try to lower the front end of the market, the back end says, no, thank you. There'll always be a buyer of our debt, but at what rate? And then if rates go that high, what happens to everything? Stocks, bonds, real estate, the banks, the insurance companies, kapoof. That's the great reset that Klaus Schwab talked about. We're stuck. We're trapped. So, yeah, this time is different, but, be leery of people who say that. I get it. I would say that, too. I've done this for going on 36 years. It is different. No one has ever seen the United States import billions of pounds, billions of dollars of gold and silver every week into this country. No one has ever seen that. No one has ever seen chief investment offers from the cartel commercial Wall Street commercial banks saying 25%. Bond market kings who have made their gazillions in the bond market saying 25% allocation isn't too much. And if they're telling you 20 to 25% allocation, what do they really believe? Right? So I don't know, dude. I don't think that this is a repeat. But if I were the players that are trying to get out of these short positions, maybe you smack it as hard as you can when it gets to that point. So everyone who is not there with strong hands falls out of the tree, and then you let it run. And that was what Michael Oliver was saying really about 1979, where they smacked it, and the big gains came after that. If you look at what Tom Luongo is saying, he's got a very interesting take on all of this. And Tom Luongo is basically saying that it's the European banks that Trump is targeting through draining the exchanges in London.
Yeah.
Because he believes the aristocrats in London and Europe are the ones that screwed Trump in 2020 with the election, and in the color revolution that came in this country to topple the United States, and that he's trying to get back at them, because when all of this gold and silver is coming back and we don't know who's getting it back, what if they said to the commercial banks, here's what's going to happen. You're going to bring all this shit back. You're going to cover your shorts, because when you're short in the US, you go long in London. You bring back all that metal, you cover your shorts here. You are now covered. And then that market over there goes kapoof. And all of those European banks go kapoof. And the Bank of England goes kapoof. And it all systemically brings down the European banks. Could that happen? Sure, why not? Who's to say it isn't happening right now? Bank of England.
Andy, I think that could be totally happening. I mean, Trump on his buildings has always had gold letters. You look at the White House in the Oval Office. I mean, I've never seen anything like that. Like, there's gold everywhere.
Jared, when Jake calls me a time traveler, I'm not a time traveler, but I pay attention to the crumbs. Most people look at each one of these things as, first of all, most people don't read as much as I do. I read 3 to 4 or 5 hours a day every day, more so than watching videos. I read. And they will read something, and even if they notice it and think, oh, that's interesting, putting them in and of themselves are interesting. Putting them in line and looking at the linear progression of events that is created through all of these things, you say, holy shit, could this all really be connected? And I had the nerve or the stupidity to say that about the BRICS and the Belt Road and all this stuff in 2019 and 2021 when people were calling me idiots. And then all of a sudden it's everywhere. Well, I've been saying this for months, that this is what they're going to do with revaluing gold to bring back manufacturing. And now you're hearing it. And I'm not a genius, but just if you pay attention to what we see now, Luongo is the only one saying this, and it's very interesting. Because in essence, if all of this metal is coming back to get the Western banks long, leaving the European banks exposed to the delivery demands of the rest of the world, including the United States, and they originally phrased it as tariffs. And I was saying on your show, bullshit, it's tariffs. It ain't tariffs. They want to reshore this stuff.
Oh, you did. You can go back and watch it, guys.
And it was, and then he says, yeah, we're not going to tariff gold. It was obvious. It was a ruse. It's one thing to bring back the amount that they were bringing back is not all about tariffs or arbitrage. It's about using that as a cover. It's the art of war. It's misdirection.
Well, even Fort Knox was probably a ruse, right? Like, we're going to go audit this and we're going to go show it, and everybody's like, holy crap.
Right. And that's just it. It's the art of war. That book, by the way, is mandatory reading at West Point. Mandatory reading as a CIA officer. It's taught in almost every major business school in the world on a corporate hierarchy. It's taught in law schools on formulating arguments. I always talk about Bill Belichick when he was, running the Patriots, would read it to formulate game script. It's how you beat your opponent without throwing a punch. It is the art of war, misdirection. And everything they say and do, you have to look at cockeyed and say, okay. Because this is why so few people are ever successful in investing. Who's been buying all the gold for the last 6 or 7 years before everyone else did? Oh, yeah, that's the most well-informed and well-funded traders on the planet. Let me reverse that. The most well-funded and the most well-informed traders on the planet, the central banks. Now who's buying it? the most well-informed traders on Wall Street, the big central commercial banks. And when BlackRock and Morgan Stanley and Jefferies and Goldman Sachs say this is going to happen, and Bank of America, could it be? And these are their top tier analysts that are saying it. They're not speaking to the public. They're speaking to their institutional clients.
Yeah. Well, and Andy, one thing I want to say real quick, because I know we're towards the end of the time here, is you guys look, this isn't someone trying to sell you gold and silver and pitch it. We don't give you financial advice. That's not what this is.
Never do that on your show. Never.
Yeah,
Never.
What this is the trends are changing. Okay, we're at the beginning of a capital rotation. We're at the beginning of a gold and silver. Well, actually, mostly a gold bull run. Silver's starting to catch up, but it hasn't even started its bull run. I'd argue that won't even start until we go past 50 on at least a weekly close. Then I think we're going to start to hit the bull run in silver. What you're seeing right now is just catch up, guys. So look, I just want to point out a couple quick things, Andy, because I know we're gonna hit here real quick. So this is a good friend of mine, OC Stacker. When I look at this question here, it depends on your strategy. If you're moving into gold and silver because you're seeing how much value and purchase power the dollar is losing over time, you're only going to liquidate, in my opinion, if you're a trader and you're taking the risk that you're going to be able to sell high and buy low. It's hard to know that. So unless you're really getting into technical trading, you're following someone that does a lot of that, you can run the risk of getting priced out by selling now, and then the price moves up higher and you've got to buy it back there. I've done it before when I haven't been paying attention. And now if I'm going to do any of that, I'm going to pay a lot of attention to it. But any quick comment on something like this?
Asset classes move in cycles. There will be a time when the real estate that you wanted to buy on the lake in, up north or wherever, the cabin sells for pennies on the dollar. When blue chip stock paying a 5% dividend is trading at fair value instead of at all-time high PE ratio with hardly anything in the way of dividends. It's dividend yield reinvestment that has made people wealthy in stocks, not the indice appreciation, by the way. And to me, gold and silver are assets that I hope I never need to use. If I do, I'm damn glad I have it. Not just for the sky falling. Maybe there's a hell of an opportunity, like that cabin I want, or, like that house in Vail, or wherever it is. I don't care what your level of wealth is, but I'm just simply saying, and if not, maybe it's there for when the dollar collapses or whatever. But if not, what more can you give to your children or your grandchildren that have not only tremendous intrinsic value, but sentimental value? Because my dad sat me down and said, this is for you, and don't piss it away. And hopefully you can give it to your kids someday, because there are very few things that you can be using that when in the year 3000, it will still be considered value. And the dollar bills in our wallet that we call money will be hanging from a frame in the Smithsonian as an example of what used to be. To me, my goal, so this is why I say it's not an investment. I don't buy it and sell it to capture a profit. I buy it and hold it as an asset, as wealth. It's there when I need it. If not, it's passed on. What you have in short-term treasuries, what you have in mutual funds or stock certificates, or what you have on anything related to financial services is your investment. This to me is wealth. And I have, other than a few times for building a house along the way in Minnesota before I moved. And by the way, when I did that, I in 2007, I sold the house I had built a year or two earlier, and biggest fight I ever got in with my wife ever. And she's pregnant with my third kid, and it's middle of winter in Minnesota. And I'm like, we're moving. She's like, the fuck we are? I said, no, we are. And I put a sign in my front yard, and I didn't speak with her for days. She wouldn't even talk to me. And we sold it, and I put all my money in silver at $9 and sold it at 44 to build my dream house. Now, most of the time, I never did that. I haven't hardly sold an ounce ever. I don't own it for that. But you were also making a trade on that. That answer to that. But I would say you would move from one asset to another, from gold to an undervalued asset would be the way to do it at that point. But I wouldn't start selling it to take profit to go back into dollars that are losing 11% per year, if not more, in purchasing. What are you going to do with it unless you buy an asset? And it's assets that make wealthy people wealthy, not their big bank accounts. I'm sure by most people's standards, their bank accounts are massive. But if you hold your money in dollars, you're losing value. You're a sucker. So that's why the wealthy have multiple homes and multiple nice cars and art and jewelry and metals and stocks and boats, and it's assets. That is how you win in an environment of inflation. And that is what this environment is ultimately about, the loss of purchasing power of the US dollar.
Okay, one last quick question. Do you see any problem? This is from Joseph. Do you see any problem with a government shutdown and affecting the price of gold and silver?
I mean, it sure might. Because what does that say about the confidence in the US dollar? It's valued in dollars. We're not valuing things arbitrarily. Yeah, I mean, you would think that the full faith and confidence of this currency, right? What confidence do people have in the United States anymore? And you know, people say, who trusts China? Well, who trusts us? And yep. It's not, you know, he said, she said, or who's tit for tat. It's gold is something that doesn't require trust, and it can't inflate, and it can't go bankrupt, and it doesn't get involved in wars, and it doesn't have governmental shutdowns, and that's what gold is. And so that is why I would say to you, this time is different. We are entering a period of time where the United States, you know, for all of the years that we've all been alive, little kids grew up around the world wanting to listen to, you know, rock and roll from the United States and wear Levi's jeans and watch movies made in Hollywood and come here and experience freedom. And God bless being born in this country. I thank God every day that I was. And I am a patriot, and I am horrified by the world my kids are growing up in right now. I am. And I think that we have squandered what is an exorbitant privilege of being the world reserve. We can't afford it anymore. We can't, because we've hollowed out our manufacturing. We make nothing, and our children are in big trouble, and our grandchildren in bigger trouble if we don't do this. So if there's any nobility in what President Trump is trying to do by devaluing the dollar, by revaluing gold, it's that, by reshoring manufacturing.
So last thing I'll just put out there, guys, if you want to get a hold of Andy, you can email him info@milesfranklin.com. Let him know StackingSurfer sent you guys. I highly recommend working with and using Miles Franklin. At the very least, reach out to them.
I love you for saying that. Make sure you ask for our price list, which is wickedly different than the prices you see on our website, which only go up to like 4 gold coins or 3 gold coins, if that. And if you see a price that's better than what you see on the price list, let us know. Almost every time we can match or beat anyone in the country.
And so the other thing I just recommend is set up an account, right? When you need it, you can use it. If you're not quite ready now, you'll get the paperwork out of the way. You'll get to start to build a relationship with Andy and the other people at Miles Franklin. And the reason for that too, guys, is when things start really moving, they're going to really start moving. There's going to be a time where Andy's going to tell you have to wait 30 days, 60 days, 90 days to get what you want.
Coming sooner than people think.
Yeah, it's going to come. And so,
real quick, I think that because for the last year, I've been telling everyone how cheap everything is, premium-wise. And the dealers have been so loaded up on product as the big money are draining the institutional size bars around the world, that they haven't gone to replenish very much. And so when everything disappears, we're beginning to see premiums on gold eagles go up and silver eagles go up right now. Gold eagles just spiked. I was selling them for $80 over spot almost all of this year, and now I can't even buy them for under 120 over spot, or in that neighborhood. I'm not looking at my numbers, but real damn close to it. And so, they're starting to spike, and that's the leading indicator. And the U.S. Mint is only making, I don't know, 9-10 million silver eagles this year. I could be off, but the numbers are way low. Probably be a collector item this year before it's all said and done. And so getting it just like that will change when people wake up. We added 14,000 clients when Silicon Valley Bank was illegally bailed out. Should have been bailed in, like Lindsay in Oklahoma we talked about last year. Little Lindsay, Bank of Lindsay, Oklahoma, which was bailed in. Half of it was. But can you only imagine if that bank had not been bailed out, but been bailed in, and everyone lost everything?
Game over. Once they do it once, it is game over. People are going to flip out.
So this is the problem. This is the human emotion side, from greed into the Mag 7 and risk off. to fear. I'm scared as shit because that bank just blew up and our neighbors lost everything and their business is gone. Oh my God. Watch David Rogers' Web, The Great Taking. I'm not fear mongering. I never do, but this is factual. Bail-in legislation is real. The Great Taking is real. Watch it. Study yourself.
Totally.
And so, yes, just like that, inventory dissipates and disappears. Now, not to mention, even when things were really quiet 20 years ago, come Halloween or into Thanksgiving, the mints run out of product anyway. U.S. mint is different than a lot of the other mints. Some of the other mints, like the UK, will start giving me 2026s in a month or so, if they do it. But the U.S. won't issue it until 2 weeks into January. So when the U.S. runs out of product, that's it. And, you know, we've already sold all of our backdates in Silver Maple Leafs and you know, delays on backdate Silver Eagles. So it's all brand new stuff. But when that runs out, then what? And if I call some of you and say, yeah, you've made a huge profit in the last couple of years, you want to sell? No, thanks. I'm not going back to dollars. Why would I do that right now? So the secondary market starts to become void of product. This is a sweet spot right now. And I've been saying that forever, and it can change like that. If you think it's going to, it'll happen quickly.
It will. And it's, you know, I mean, the reason I do this channel, the reason I have you on, Andy, is to wake people up. It's to help you guys understand what's coming here. If you're not believing this, I recommend watching more videos. Okay. This isn't just about trying to get the highest ROI. It's not about trying to,
David Rogers' Web, go to YouTube.
Yeah, exactly.
Rogers' Web, The Great Taking. He'll narrate his book, or you can go to his website, The Great.
It's a great book.
Download it for free. It'll scare the shit out of you.
You can listen to that. You should also go and get the Creature from Jekyll Island if you want to understand the Fed, and then also The Art of War would be a great book.
G. Edward Griffith.
Yep, G. Edward Griffith would be awesome. So, anyway, guys, Andy, I want to thank you for jumping on here. I know it's been a few weeks since we had time to put together. We're both traveling, but I'll reach out to you this week. Just see if we can connect on a few things. But anyway,
and love your community and Jake, and you guys have all been so kind and gracious, and anything I can ever do for you personally, Jared, or for any of you guys out there, info@Miles Franklin. Any questions, make sure you let us know that you came here. Ask for the price list. If you see something better, because we don't update it every day, let us know. We'll work with you. We just want to help as many people as we can, but that's not why I come on these shows. After all these years, it's the last thing I need to do. It's because I care too, believe it or not. And I think, you know, the act of running a business and doing the right thing by people do not need to be mutually exclusive. In fact, if I wrote a book, I would call it How to Get to the Top Without Being a Prick. You don't need to be. You can do right by people. And actually, that goes a lot longer than being short-sighted and doing things that are only self-serving. So that's my little soapbox rant, and I thank you for letting me come here and talk with you, and I look forward to doing it again real soon, man.
It's always fun. It's always a pleasure, Andy. So thank you so much.
Yeah,
all right, everybody. Thank you for coming.
Later, everybody.